Hello class 12 Commerce. Today is another important class of income from house property, a chapter of your tax syllabus. Previously I have provided three important class for this income from house property, and today is the fourth important class. In this class I am going to discuss with you some important aspects of income from house property. To calculate income from house property, first we need to know different important aspects of income from house property. The main aspect being what is fair rent, what is standard rent, what is composite rent, what is municipal value, what is annual value. All these important aspect contributes to the calculation of income from house property. So today in this class we will discuss about these important topics, starting with composite rent. So our first topic of today is composite rent. Composite rent is today's important topic of house property. In some cases, the owner of a house property may derive rent for the use of the property as well as some other assets. Sometimes a tenant has to give rent for using the property as well as some other services also. That is, apart from paying rent, they have to pay for services like electricity, paying to the watchman, then lift, services for lift, or any other extra machinery, that services. So they have to provide rent, they have to give rent along with the other service charge also. So together the rent of the house property as well as these service charges, together if we add, we can get a composite rent. So composite rent is the rent received for the use of the apartment or the use of the house as well as the use of other services also. Composite rent is the total rent received, where the tenant is paying the rent for the use of the house as well as some other services. That is house rent plus other services. House rent plus other services is included in this composite rent. So composite rent is all about using not only the house property but also some other services like lift, electricity, watchman, water supply, etc. Now, if from the total rent received, if from this total composite rent we separate or we deduct the other services, if we deduct this other services part, then the actual house rent received will be taxed under income from house property, and these other services will be taxed under income from other sources. I want to make it clear, the actual rent received devoid of these services, if we deduct from the total composite rent, if we deduct the other services, then we are going to get the actual house rent received. The actual house rent received. This is we going to get if we deduct from the composite rate. If we deduct this part, we are going to get the actual rent received. Now this actual rent received will be taxed under income from house property. This is going to be taxed under income from house property. Not these things. These things will be taxed under income from other sources. From other sources. So this is the concept of composite rent. It includes rent from house property as well as rent from other sources, usage of other services. Now we come to the next important point, that is annual value. Now in order to find out income from house property, we need to find out the annual value and not the rent received. rent received will never be considered by income tax department. They will consider the annual value of the house and not the rent received. Make it clear that for a property which is actually let out, the rent received by the received from the tenant will never be considered as income from house property. Rather, the artificial income or the national income will be the annual value of the house. The annual value of the house will be considered as income from house property by the income tax. So, we need to find out the annual value first. Now, what is the annual value? Many things can be considered as annual value. Municipal value is there, gross municipal value is there, then standard rent or rent received or rent receivable. All these things are included in the annual value. Whichever will be considered, any one of these three will be considered as the annual value. Now, which one will be considered as the annual value? That is a different issue. But first we have to learn these definitions separately. First comes the actual rent received. The actual rent received for using the house, for using the flat, for using the apartment, the actual rent received or actual rent receiving, that will be the rent received. That will be considered as the rent received. The actual rent received from the tenant for staying in that house devoid of other services for 12 months, that will be considered as the rent received. Now comes the municipal value. This is also very important. Municipal value. This is also very important. Apart from rent received, you know the actual rent received. Then comes the municipal value. For the purpose of levying tax on householders, the municipal authority makes independent assessment to determine the lettable value. It is upon the hands of the municipal authority to find out, to assess the lettable value. If the house is let out, then what will be the lettable value according to the municipal authority? So that is called the gross municipal value. And upon that value, they charge a tax. They charge a tax upon that municipal value that they have assessed as the right value for letting out. So that tax chargeable is called municipal tax. So municipal tax is always chargeable upon the municipal value which is decided by the municipal authority. This is called the municipal value. And rent received is the actual rent received, or a similar authority if they tries to fetch a rent, then what will be the actual amount of rent received from the tenant for 12 months using the property, that is called the rent received. So annual value will be anything among this rent received or fair rent or standard rent or gross municipal value. That we don't know, that we will calculate when we will start the sum. But first, in this context, we must know another two important definition, that is what is standard rent and what is fair rent. After municipal value, fair rent. This is the second important definition. What is fair rent? Fair rent is the rent which a similar kind of property may fetch in a similar locality. This is decided by the income tax department. In the fact, it may consider the transactions entered by other property holders. So, fair rent is a rent which a similar property in the same locality can fetch. This rent, fair rent, is determined by the income tax department. Fair rent is determined by income tax department. If a similar kind of property, like the income from house property that we are calculating, a similar kind of property, what kind of income that will fetch in a similar locality, that rent is decided by the income tax department, and that rate is called fair rent. Fair rent is another important aspect while doing the calculation of income from house property. Then comes last but not the least, that is standard rent. Standard rent. Standard rent is nothing but it is provided by, it is a reasonable rent that an owner may get from the property. But this reasonable rent an owner may get from the property is determined by the Rent Control Act. Rent Control Act decides a bar, a limit, according to which, following which, a property can fetch an income. So standard rent is the standard or the reasonable set rent by the Rent Control Act. The Rent Control Act decides a reasonable set of rent which a tenant must pay. So standard rent is nothing but in case of a Rent Control Act, if a reasonable rent is set, that is called standard rent. It is set by the Rent Control Act. The rent set by the Rent Control Act is the standard rent. So these are the few important aspects that you should remember while the calculation of income from house property, that is municipal value, fair rent, rent received and standard rent. These things you must know. Why I am telling? Because these things will be considered while we find out the gross annual value, which is the main thing of the calculation of income from house property. To calculate income from house property, which is to be taxed, we must know the annual value. And to know the annual value, we must know these 4 or 5 things. These 4 or 5 things like municipal value, fair rent, standard rent, rent received, etc. Because among these 4, any one will be considered as the annual value. And which one will be considered as the annual value, that we will learn while doing the sum. So today in this class, up till this, follow the class, follow the PDF, download the PDF provided with this video so that you can get a clear concept about these definitions, which will be helpful while doing the calculations of income from house property. First you learn these definitions, understand these definitions, then we will slowly move on to the sums, because that will be easier for us. If we know the definitions well, we can get a clear idea and it will be helpful for us to solve the sums also. So today up till this, thank you.